Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
Let's go out there. It's February 21st. My friend Curzio, the Wall Street Unplugged podcast, to break the headlines and tell you what's really moving these markets. So today's show, talk about NVIDIA's reports after the close. And if numbers turn out to be bad, will this spell doom for the entire market? We also saw horrible earnings over the past 24 hours, including SolarEdge, Palo Alto, Teladoc, down 15-20% each. Why you should be paying close attention to this trend. And then finally, AI. AI, the big talk out there. Well, rumors have it that demand is starting to slow. But the data I'm about to share with you, I'm going to let you decide if that's the case. Let's get into today's show with something personal. On a Wall Street Unplugged premium podcast a few weeks ago, that's a paid podcast for Daniel and I host, I took a live call from my 16-year-old daughter from school. And she said, Dad, you got to pick it up. I got really good news. And it was in the middle of taping. And, I had my phone right in front of me. I just picked it up. I said, you know what, Dad, let me just pick this up as we were taping. And we kept it on there. But she was really excited. The teacher also got on the phone with me to tell me that her art piece, a sculpture she made, received a Gold Key Award, which is a big honor. And I didn't know what a Gold Key was, to be honest with you. If you're a writer, if you're an artist, you may know. And it's this really big award that's given to students, I believe, 7th grade to 12th grade, that just has like exceptional projects. And I think they give it out to a few hundred people in each state out of, I'm pretty sure for Florida, it was like 30,000 submissions. But her sculpture also won a Vision Award. And we celebrated that this week. It was at the Florida Theater. It was really cool. There's a lot of kids there with their parents and stuff. And when I researched the Gold Key, I was like, wow, this is pretty cool. Just like Andy Warhol got one, Stephen King got one, lots of amazing writers, artists. Again, this is an old prestigious thing. But the Vision Award, I didn't realize how important that was. And that was even a bigger deal. And after giving out the awards, and she got a Gold Key Award and stuff like that, again, they give this out to a few hundred students. There were only 5, which my daughter received one of them for the Vision Award. And this is work that's going to be judged in New York City. And if selected, meaning that if selected to be the best in the state, she's going to go to Carnegie Hall, where it'll be nominated for the National Award. But at the end of the ceremony, it was really cool because you have all these kids getting up and getting the awards. And they have silver awards and national, I think it's honorary mentions and stuff like that, and, the Gold Key Awards. But at the very end, they were like, these 5 pieces of work represent, something that's more than just the artwork. They're saying something, and they brought on stage with 4 of the kids, and, took a picture. And it was just really, really a cool moment. Really proud of my daughter. I just wanted to give her a shout out on the podcast. And she's really passionate about art. She's great at it. I don't know where she gets it from. I can barely draw a stick figure. But it's always great as a parent, I think. And a lot of you have kids out there listen to this. And we have young people and older people, whatever. But it's always good to see when your kids are really passionate about something, really love doing it. And for me, I always want to push them into that direction. And not push them if they don't want to do it. It's fine. I want them to do something that they're going to love. And it's very important because I love to do it. I love podcasts. I love researching. I mean, this isn't a job to me. And, doing it for 7, 8, 9 hours, 10 hours, sometimes even longer a day, and just, trying to find inefficiencies and stuff. I love this, right? And people, I don't think anybody loves it more than than I love. And that's why it's easy for me to talk about it. It's easy for me to get excited about this stuff, and you see the passion. And when you have a job, because your job is really a big part of your life, you're there for so much that imagine if you hate your job, and there's a lot of you out there that maybe hate your job. It's tough. So, my 13-year-old daughter loves basketball, gymnastics, but, always tell me, if you find something passionate you love, go all in, work harder than everybody else, be confident, but also be humble. And it's hard to say that, right? Because confidence is a good thing. There's a big difference between being confident and being arrogant. There's a huge difference between that. And being confident is not a terrible thing, but I think sometimes that confidence could also lead to you not being humble and not realizing that there's people out there that you could learn from. And you learn that. I learned that probably in my early 40s and going forward, where you're like, I'm interviewing a lot of people. I'm like, holy shit, there's a lot of smart people. I'm not, I'm an idiot compared to some of these people that you interview. And you want to learn from them. and ask a lot of questions, but you always leave the door open to get smarter, to learn more. And then when you get to that point in your life, maybe you want to pass that stuff down, to the next generation or whatever you do. But I tell them, always be open, be humble, be open to change. Because things that I've seen in my career, and even my late dad was kind of like a perma bear. You see perma bulls. People, no matter what the facts are, it's what they believe, and it's a cult. And it's hard to rewire your brain to look at things, but and say, wait, and call bullshit. All right. And I learned that from traveling all over the world and researching different topics like fracking and COVID and things like that. You guys know, you were hearing different stories here than you were hearing every place else. And, I got a little heat from it. But, I don't give a shit if people don't want to listen to me because I'm telling them the truth and I'm telling them where I'm investing. If you don't like it, there's a lot of other podcasts. There's actually hundreds of millions of podcasts now in this 15 years when I feel like I was an island with Andrew Horowitz by ourselves doing it for that long ago, 16 years ago now. But you just being open to change, learning as much as you can, and also, own your mistakes because they're going to be the greatest lessons in life. And when you have those mistakes, you have to go through them personally. You can read as many books as you want about the stock market, what you should do, whatever. But when you were an investor during the credit crisis and you are 70 years old and you have, $1 million in your portfolio because you worked your ass off and that's your 401k, and you have your home, which is paid for. Next thing you know, your home goes down 30, 40%. Your portfolio is down 40, 50%, depending on what you're in. It could be down even more. You're like, holy shit, am I going to have to work again? And then when the market comes back, you could see why they have cash on the sidelines, where they're like, holy shit, I just lived through that. I didn't know if I was going to have to go back to work. And you can't read that in books. I mean, that emotional feeling is what builds your character. Going through all those past experiences leading up to that. So own them. Like, if you make mistakes, don't beat yourself up. Just keep moving forward. It sounds like it's easy. I know it's not, especially things that you're passionate about. You get punched in your face like, holy shit. But believe me, I mean, you just keep moving forward and you're going to get those wins. And to see my daughter get that win is so special. And when you get that win, I'm going to tell you, enjoy it. Because life's short. I see that so much where people, they'll achieve a goal and they're like, celebrate it. Be happy. Things are not always going to be great. Things are not always going to be bad. But celebrate that, because you worked your ass off to get there. And when you do, celebrate it. And then you move on to the next chapter and try to get better and stuff. But, I try to install that in my daughters. It's not that easy. It's not that easy to do. They're young. I know I'm not giving them this whole life lesson stuff. I want them to make their own mistakes and learn by themselves. But it was just really cool. I didn't realize how big that award was, and I'm really proud of her. So the Vision Award, I think in a couple months I'll let you guys know how that works out. But, out of the 5 pieces they selected, I'm confident that, she has a really good shot. Really, really good shot. So it should be interesting, and I'll update you guys. So anyway, just want to share that little personal thing, give my daughter a shout out. But I want to get to NVIDIA. Now, publish this podcast. You could probably listen to it earlier than NVIDIA is going to call. By the time you get this, NVIDIA is going to report. I like telling you, what I believe is going to happen, and then we'll cover it. I'm going to cover it more in depth tomorrow in Wall Street Unplugged with Daniel. But NVIDIA is expecting $4.59 when they report for the quarter on sales of $20.4 billion. That's for the quarter. I think they easily beat those numbers, but the guidance analysts are forecasting for, I have to tell you, are pretty conservative. So when I look at the street, earnings this current quarter are for $4.59, and their guidance for next quarter is $4.85. Shouldn't be too hard to beat that. Sales are expected to come in at 20.4, and the street is expecting the guidance for next quarter to be 21.5 billion. I think we could see 23 to 24 billion in sales guidance and over $5 a share in earnings. That's going to be their guidance. And you're looking at what's going to happen if they report that. Doesn't necessarily mean it's going to go up. We're down about, the past couple of days, we're down about 6-7% in NVIDIA, taking, a little bit off. But when you look at it and you take a bird's eye view of everything that's been going on, the stock has had an unbelievable monster run. It's up 12% still, even after the 6-7% decline over the past 2 days. It's still up 12% in the past 30 days, up over 40% year to date. If NVIDIA report, they would have to actually fall by 30%, 31% to be exact, to be trading at the same level the stock was trading on January 1st. That's how much it's moved. So people compare it to the dot-com bubble. Oh my God, this is crazy. It's not crazy when you look at the numbers. They're putting up the actual numbers. And even with a strong beat and strong guidance, which I give a very high probability for, given that, and this is, Wall Street stuff from my experience, you got Goldman Sachs, Morgan Stanley, Piper, UBS, I think also a few others. But those are the four I know that since February 12th, I believe. Again, this is not too long ago. They all raised their estimates and their target price. Analysts will not do that unless they're very, very confident that they're going to report great numbers and great guidance. And how do they know that? Because they all talk to the company. And it's not like the CEO of NVIDIA is going, hey, guys, these are the numbers we're going to report, but they're all calls that are made and saying, hey, I'm just looking at channel checks and seeing what's going on. And they, there might be a little hint in there. And they say, you know what, look, we're not seeing any slowdown in demand. That's what happens behind closed doors. And it makes sense because Goldman Sachs is getting paid for their research. They're going to use, NVIDIA is going to use Goldman Sachs and all these companies have buy ratings if they want to raise money, do bond offerings or whatever, right? So investment services. So it's all like, we'll hold hands and this whole entire, but you don't see analysts upgrade those numbers into the quarter, especially a couple of weeks, unless they know something, because you're risking your job. If you upgrade the numbers and your target price and all that stuff, and the target price will like from 600 to 850, 880, whatever it was. If you do that and you're wrong, you're risking your job. You look like an idiot. And say if NVIDIA comes out today and their guidance is absolutely horrible, like really, really horrible, you're going to look like you don't know shit in the stock. No one's going to ever listen to you again. So the fact that those reports came out a couple of weeks usually means that you're going to see a nice run up. And it has run up other than the last 2 days. So there we are now. I think they're going to report strong numbers. They're going to report strong guidance. And the stock could probably sell off a little bit, kind of like what we saw last quarter, because it's, sell the news event. Again, people are going to say, well, it's up a lot. But this is the thing I had with Disney compared to NVIDIA. With Disney, they're reporting subscriber guidance going up. Holy cow, they're having 20 million, 30 million. They were giving away the service for fucking free, right? So if you're giving away your service for fucking free, that's okay. All right, because that's the metric everybody was looking at. But eventually the numbers matter. And this is what I think people, when I hear on TV, that NVIDIA's run up so fast. NVIDIA's not like one of these chip companies that have run up tremendously. I forgot SMSI, I think it is. It's run up, whatever. I saw some stats on it, like, 25 out of 26 days. It's not AMD, who actually lowered their guidance. This is the numbers. The actual numbers that they're reporting are absolutely insane. And if you're looking at the stock today with the numbers that they're reporting, it's trading at just 31 times forward earnings, which is cheap. I know what you're thinking. Frank, what are you, out of your mind? NVIDIA is cheap? Nobody's saying NVIDIA is cheap. You cannot look at a P ratio without looking at the growth in earnings and sales and what's projected. Okay, because a stock could be trading at 60 times forward earnings and be cheap based on the potential growth, which we saw with every major company that you look at that's on top of the NASDAQ 100 right now. Microsoft, Apple, all traded above 100 times forward earnings. Filled in those valuations because they saw enormous growth. Netflix was there. Celgene was there. So many of these companies, every single one of them traded at, they didn't trade at like 15 times, 17 times forward earnings. That's when Buffett bought Apple, when it was, dirt cheap. Even Apple right now trades for 27 times forward earnings, I believe. But when you're looking at 31 times forward earnings, which is a 50% premium to the market, but when we throw in the growth, this is a company's projected to grow sales at this level. $20 billion in sales, expected to grow sales by 45% annually over the next 2 years, and projected to grow earnings close to 60% annually over the next 2 years. You can say, well, those numbers are going to come down. Even if they came down and they're only growing 30%, they're still growing almost 3x the rest of the market. Right? And 8x when it comes to sales. That's how much faster they're growing. So would you rather buy Microsoft trading at 36 times forward earnings? You have Apple a little bit cheaper, but both of those names are barely projected to grow earnings year over year. Barely. And you can take Microsoft, good at 36 times forward earnings Microsoft is trading. At a high evaluation and growing, barely going to grow earnings year over year. Barely growing sales year over year. That's not the case with NVIDIA. The demand is real. You look at it, free cash flow in 2023 was $3.6 billion. It's cash left after everything, paying the bill, free cash flow. This year, it's going to be $26 billion. $26 billion. Okay, it was $3.6 billion. In 2025, it's going to be close to $50 billion in free cash flow. Even after these numbers, I can't see NVIDIA not increasing their buyback. They announced a $25 billion buyback last quarter. They're probably going to increase it this quarter. And what else are they going to do with the cash? But if you're looking at the buybacks that are in place, which just announced last quarter, and you're looking at the valuation at 31 times forward earnings, if we decline and say if they don't bomb the numbers, right? If they don't say, okay, we're doing 15 billion in sales instead of 20 billion in sales, that's different. But if they report decent numbers, which are widely expected, I'd be surprised if they don't report good numbers and good guys, considering the analysts out there, the analysts that know the most and have the direct line to the CEO, raise their target price and raise their estimates tremendously into this quarter. But if they report those numbers and we see the stock pull back like we did last time at 10, 15%, there's going to be a floor under this name. Because the valuation is going to be so low based on their growth, and then you throw in the buybacks, it's going to be an incredible buying opportunity. Incredible buying opportunity. If you believe AI is still in its very early stages of growth, which is the next topic we're going to talk about. Because this is what happens, leaned a little bit of a sell-off in NVIDIA at tonight's earnings. And last week, a report came out that the lead times for NVIDIA chips are decreasing. So, meaning it used to take 10, 11 months to ship its H100 chips, which are its prime chips. They're already like 2 generations ahead of that. They're going to sell the H200, and they have another chip that they're going to sell probably starting in about 6 months. This is how far everyone's behind. They're raising the prices for the H100 chips, right? That's why you're seeing those lead times go down, because they're going down to 3 to 4 months. So those lead times used to take a lot longer. So right away, people are like, okay, well, that means demand is slowing. Maybe they're not buying as many chips. You're getting them out a lot quicker. Forget about that. NVIDIA is doing well in the supply chain, that they raise prices of the H100 chips because the next chips are coming out. People are probably waiting a little bit. That's fine. No one wants to talk about that. It's a great headline. And a lot is saying this is due to weak demand, right? Weak demand for NVIDIA's chips, which therefore means demand for AI starting to slow. And that's been going on in the rounds. Listen to CNBC, listen to Bloomberg. They were in this bubble. Bubbles don't include you're generating your cash flow free cash flow going from 3.6 billion to 50 billion in 2 years. That doesn't sound like a double to me. That sounds like you're putting up the numbers, so your stock should be a lot higher because you got a great product that you're selling. Now, first, I want to go back to this report because I don't know, most people, when you're not going to have access to these reports, institutional reports from UBS. This is where everyone's like quoting from UBS. And UBS did say, hey, the lead times are coming down. Now, I guess, and it makes sense in today's world in the media, that people didn't feel like reading the whole report, or more likely, read the report and just wanted to provide a great headline. This way I get lots of page views, which makes sense. AI's in a bubble and it's dead, this and that, right? I'm going to tell you from someone who has access to this report. And this is just from last week. So UBS did say that. But also in that report, UBS raised their target price on NVIDIA from $580 to $850. It raised its 2025 earnings on NVIDIA by 15%, and its 2026, I don't know if you remember, we're in 2024 in case you forgot, and in 2026, they raised their earnings estimates by 32%. Doesn't sound like someone who believes demand for AI is slowing. But again, we live in a media world where everything's taken out of context and people want headlines, and that's fine. AI is slow and it's a bubble. Here, buy my newsletter. I'll show you how everything's going to crash, whatever. I love the people who cite with AI when they want to sell something that it's going to end the world. If it's going to end the world, why the fuck am I going to buy your newsletter for? I'm going to die. Like, come up with a different marketing strategy. It's so funny when I see this headline. AI's going to kill everybody. And again, maybe be a little worried about it. Do your research on it. It's totally different from generative AI. We're not close to that. And I know this because I've been doing a lot of research in this sector. But for those who still think AI is in a bubble, and I've covered bubbles all my life, and when you look at bubbles, they tend to go higher and higher without the numbers. That's what a bubble is. They go higher and higher, but they're not really backed by the actual numbers. They're backed by the expectations of something happening in the future. And there's lots of expectations built into AI, but the numbers are there. The numbers are there. And when I look at the growth going forward, I want to share just a few stats for you. I'll let you guys decide. We have a whopping 83% of companies, over 4 and 5, claim that using AI in their business strategies is a top priority. Meaning that this demand is not even in the marketplace right now. It's not. Are you currently using it? Very few. Some of you email me. Very few are starting to use it in the marketplace. It's very, very early. It's kind of like Bitcoin. 17, 18, 19, 20. Not a lot of people own Bitcoin. Now you're seeing all ETFs and everything like that. Now you're seeing that price move higher. We're not even close to being that. We're very early stages. Only 14% of workers report that they had extensive discussions about AI at their workplace. Only 14% of workers. I mean, makes sense, I guess, because a lot of those workers, I'm sure the CEOs don't want to talk about it. They'll talk about AI with maybe the department heads and what we have to do to implement them. But what I've seen within this industry, I'll cover that in a second after I go a couple more stats, the amount of jobs this is going to take is insane. It's insane. And you're seeing it already. That's why so many companies are laying off while their stocks are at all-time highs, especially the big technology companies. Getting more into that in a minute. According to Grandview, annual growth rates for AI are projected to be 37.3% over the next 6 years. Holy shit. And you might be saying, Grandview, who's Grandview? I took Grandview because that's the slowest percentage out of everyone out there that's really talking about, through 2030 of where this market's going to go. 37% annually. So, remarkable growth. Growth that you have to kind of be in if you really believe that. How about PricewaterhouseCoopers? Pretty important company. It says AI tech can increase revenue by over $15 trillion in the next decade. Not a long time. Boosting the GDP of local economies by additional 26%. I look at this trend, it's very real. It's still very early in its growth stage. In a few years, almost everything you read, almost every movie you watch, every video you see on social media is going to be AI-driven. And this is from, you can look at Google Genesis, OpenAI, ChatGPT. These are leading the charge. But I don't know if you saw OpenAI's did their video service called Sora. And you should look it up. They talked about it a little bit on CNBC. Look it up. You could type in anything. You can type in a gorilla dancing in the ocean, and have any background, planes going past in the background with beautiful trees, anything you want, anything. With a bus driving by, all you have to do is type it in, and it creates a 60-second short for you, exactly like that. You could add music, you could add anything you want. And this is just the beginning. It's a beta version. But they're releasing videos of people on a beach, and a shark comes up and like talking to them. I mean, you could do whatever you want with this by typing it in. I mean, the level of creativity, and all these people had so much creativity, it's going to level a playing field. Plainly said, there's a lot of stupid people that are going to be able to use this and be in the same level as somebody that's very creative. That's what this does. Do I have to pay that guy $1 million then to run this whole head for a major company? Or do we start using AI? Talk about a lot of these topics, especially on Twitter, guys, at Frank Curzio, if you want to follow me, in case you don't get enough of me on this podcast and Wall Street Pub Premium with Daniel. But it's a way to follow me daily. And look, if you're listening to my tone, it's a lot different, right, than it was 4 months ago, where I was like, oh, this AI and people going crazy over AI. And this is, you're going to see me do this a lot because I change when the facts change. With me, I want to see all this hype. What's going on? I want to dig in. This way I get to tell my subscribers. This way I can talk to my contacts, say, hey, what's really going on with this story? Because when you really know what's going on in the story, eventually that's going to happen. And that's how you can make money on if something's positive or negative. You just get out of it, you could short it if something's real or not. By knowing the actual numbers in a story, that's always going to come to fruition eventually. Eventually. The numbers matter. They come to fruition. So you could, just like Disney, you could say, oh, 100 million, 200 million, we're getting bigger than Netflix in terms of subscribers. They're not subscribing to your content because you don't have great new content on your site, and all your new content, your best content always goes into movies first. So why even have a streaming platform for? And that's people are the reason. That's why the stock went from 180 to 80. Finally, it took a while. I mean, 130, 140, 150, 160, the same story, but eventually the numbers matter. They fill in. Now, my tone changed around 4 months ago, and then, started research, like, wow, this is really cool, getting emails from you and stuff like that, frankcurzioresearch.com, got great, it goes out to 100 countries, getting, a lot of brilliant people in the software industry, and then I took that executive AI tour at the Consumer Electronics Show and really learned a lot about companies and who's full of shit and who's not, and seeing this technology up front and what companies are able to do. This is world-changing technology. We haven't even scratched the surface yet. And if you look at Twitter in 2006, it took nearly 2 years to reach 1 million users. Instagram in 2010, 2.5 months to reach 1 million users. ChatGPT reached 100 million users in 5 days. It generated 1.6 billion visits in December alone, making it the fastest adoption of any technology in history. And I'm going to tell you, it's going to impact every single industry. I know you're out there, you say, well, Frank, I heard this about nanotechnology. I heard this about 3D printing. I heard this. Believe me, I covered these trends all my life. This is different. This is different. You're finding a way to increase productivity while lowering your costs dramatically. That's the holy grail for every business in the world. How do I spend less and generate more money? Because that increases profits. And this is a very easy way to do that. I mean, there's tons of companies. You see a lot of jobs at risk. I'm going to cover a lot of this more in detail with Daniel tomorrow on Wall Street Unplugged Premium. If you're not familiar with that, it's a premium service. You could, find more information out on CurzioResearch.com. Just we dig more into the details. We provide lots of new ideas, investment ideas for you guys. A little bit more aggressive and stuff. Really speak our minds on that, which is really cool. And also gives you access to our Dollar Stock Club portfolio. Many of you are subscribing, and a lot of people got amazing reviews on it. But there is a ton of money to be made in this industry, which has a total addressable market, depending who you're listening to or who you're reading it from. But almost everyone will tell you, it's in the trillions. It's in the trillions. So how do you get a piece of that? How do I get involved in that? That's what you should be thinking right now. It's not just an NVIDIA or a chip story. It's not just Microsoft, Google, Amazon software cloud story. These guys are going to benefit. I mean, it's anyone who has control of data for over 5 years. If you have 10 years, this is where AI is going to make game-changing differences. There's lots of under-the-radar names that weren't available. Now they are, small, mid-caps, just beginning to implement this technology. But this is something that has the potential to change the world, especially when you look at industries like healthcare. I think you're going to see AI have the biggest impact in healthcare than any other industry. I'm familiar with this industry. It takes 10 years to bring a drug from clinical to FDA approval. 8 to 10 years. It costs almost $2 billion to do that. You have all these drug companies that are seeing their patents, right? Their best selling drugs come off patent. And then you have all these smaller companies at clinical trials. They're sitting with hundreds of thousands of compounds with great technology, figuring out ways that they could bring some of these things to market to cure diseases or whatever, but they have to go through a massive process to do it. Imagine if you could accelerate that process by a factor of 20. I mean, now we know that most of these guys want to launch treatments and not cures. But we're going to be at the point where we're going to see cures for a lot of different diseases. And this is going to speed up that process tremendously and lower the costs tremendously. And that's what you want. I don't care about how much money they make or whatever. I know there's a lot of bullshit behind a big pharma and all this stuff because whatever, we know. Pfizer's the worst, again, go back and look at not just COVID, but they've been bribing the FDA for years. And they say, you know what? Instead of bribing, let's just get the main guy on COVID and put him on our board. Gottlieb, put him on our board. Is that not the biggest conflict of interest you'll ever see in your freaking life? I don't know what is. Forget about that. Leave the politics aside, leave everything aside, leave the emotions aside. But these big pharma companies have massive balance sheets. That's why you're seeing them buy a lot of these small biotech clinical companies right now. You've seen M&A pick up tremendously in that field after these things have gotten annihilated. But imagine being able to bring all of these things to discovery a lot quicker and a lot cheaper. That's why they're sitting on the shelves. It's just too expensive. They want the guarantee. But you're looking at education. Holy cow, it's going to game changer in education. Retail, defense. Then you go the obvious disruptions are within marketing. If you're looking at, customer service, e-commerce. But I'm testing so many of these platforms. I suggest you do the same. They're like, whatever, $10 a month, $20 a month. and see what these platforms could do, because over the past 4 months, especially over the past month and a half, just really digging in and seeing this stuff, I'm blown away to what it could do just for our business alone and what it could do for any single business out there, which is the really hard shit to do, especially if you have e-commerce sites, which everybody has web access, and writing funnels. Who the hell likes to write funnels? Try hiring people to write funnels. It's so difficult. Try hiring someone to market your company. It's so difficult. That doesn't really know your company, or you're getting someone with less experience and not really tied emotionally to you. You need big money, because you're going to have so many failures during the marketing stage that you're finally going to find something that works, and it could be a blockbuster. But a lot of people don't have money that they could lose before something works. This is a game changer. Writing all these sales emails for you, doing all this stuff that takes a lot of time, and you have to spend a lot of money to hire, really smart people to do. So researching this topic to death, you can see my tone has definitely changed over the past few months, and bring a lot of new ideas to Curzio Research subscribers in the month and years ahead. But please, I'm going to urge you to get educated on this market. It's difficult. Everybody knows and heard of AI. They know ChatGPT, and type a couple things in. Go deeper. Go deeper. Start using some of these programs. Use Jasper. Use some of these programs and see what they're capable of doing. Because once you do, you're going to be like, holy shit. Especially if you have your business, you're going to be like, oh my God, this is amazing. I can cut costs dramatically. And when you see what I've seen in this business, and I'm going to start bringing on people and experts and interviews and stuff like that, it really, really is fascinating. You need to get a piece of the multi-trillion-dollar pie that you're going to see, this total addressable market over the next few years. You want to be in this trend. And I'm not talking about NVIDIA. I'm not talking about AMD. Those are the chip hardware. They're the first in line, and the second in line are going to be, Microsoft. But there's layers being built on their cloud services to offer all kinds of capabilities. And now it's the next layer of companies that are going to come in, where you're going to see incredible results. You're going to see their earnings surge. They're going to provide a way to provide more efficiencies for their clients, their companies. It's going to result in higher earnings, much, much higher earnings for these companies going forward. But it really is fascinating, and just be prepared to not do anything for a few days once you start researching, because you're going to go into a rabbit hole and be like, holy shit, this is really cool. This is really cool. So, one last thing here before I go. When I saw last night a couple of companies reported. Everybody's waiting for NVIDIA after the bell. It's fine. But a couple of companies reported, and holy shit, were they bad. Palo Alto cut its sales guidance from 18 to 16%. Stock's down 23%. Teladoc actually reported better than expected earnings. And when I say better than expected earnings, it was better than expected when it came to earnings loss. They lost less money than expected. But they lowered their sales guidance by just 4%. Just 4%. $673 million to $640 million. And the stock fell 20%, down 20%. Yet SolarEdge report also down about 15%. They actually reported horrible guidance. I think it was $200 million compared to like $370. That's different. I'm talking about these other two companies, because Palo Alto and Teladoc didn't miss by a lot. Palo Alto cutting their sales guidance from 18% to 16%. And there's a little bit more going on under the hood. A couple comments and stuff like that. But should the stock be down 25% right now by reporting a slight decline in sales guidance? Should Teladoc be down 22% after guidance was light by 4%? And I'm bringing this up because this is the market that we're in. Super expensive valuations for many stocks, where we're heading into a slowdown in growth based on GDP, where we're supposed to see rates come down, and they're not. I mean, the cost to do business, especially for Teladoc, which is losing money, increases dramatically. I mean, this lower interest rate environment, are we going to have it? I remember, hey, we'll go back down to 2%. Will we go down to 3%, below 3%, below 3.5%? We haven't even started going down. It's going back up again. Inflation numbers, CPI, PPI came out. Mortgage rates shot back up over 7%. And you could see mortgage demand crashed down 10% for mortgage applications. You see this impact where we're in a market with much higher interest rates that should not be trading anywhere near these levels that they're fucking trading at. And that's what happens when you miss by this much, when you have an expensive stock. Because some of these names are priced to perfection. Palo Alto trading over 50 times forward earnings. Slight miss, goodbye. Teladoc doesn't even have a PE because they're losing money. Small miss, goodbye. So if you own one of these companies, Just be prepared. They're priced for perfection. They can go up more. But man, if one little thing goes wrong, you're going to get nailed for a 20% plus decline. But if you own these names, you better hope they beat and raise. I know we're kind of at the end of earnings season. We still have some retailers set to report, small caps set to report. Most of the big guys have probably had a guess 85% of the S&P 500 reported. But even if the company's coming up, you better hope they beat and raise. And I don't think it's going to be an easy thing to do, given that most companies have already announced the majority of their cost cuts. We've seen them in the past 18 months. Cutting employees, cutting costs, and it's been reflected in their earnings. You only cut costs so much. And now, these companies, are they going to be able to grow sales? I'm talking about even Apple and Microsoft, the biggest companies in the world. Are they going to be able to grow sales in a market where GDP is expected to slow a ton this year? Not an easy task. I'm not seeing the same case when it comes to small caps. Different. Small caps still well off their highs. A lot of these names. I'm not telling you to buy the Russell 2000 because 40% don't generate earnings. They're going to continue to get nailed and really hurt if interest rates stay high. The cost of doing business just is raised dramatically. But there's a lot of names within there, within healthcare, within just consumer services and stuff like that, that are trading at levels that are very cheap. They're growing. Might actually find some that pay a little bit of a dividend. They generate free cash flow. They're buying back their stock. There's still opportunities there that I am seeing, and in some areas I'm seeing. But just be careful, because what's driving this market higher, all the Palo Altos, all the Teladocs, are these companies that are trading at sky-high valuations that already cut costs tremendously. And it's going to be very difficult for them to continue on that pace, because just a little bit of miss with their valuations, you can get annihilated. So I've been saying it's one of the most dangerous markets I've seen in my career, because it's forcing you to be in it. And if you're not in it, you miss out. Forcing you to be in it. It's not like, credit crisis. Holy shit, I don't know what's going on. I'm out of here. COVID, oh my God, they just closed the world. I'm out of here. Let me sell everything. It's not like that. There's a market where you're getting punished for not being in it, but it's forcing you to buy expensive companies at crazy high valuations in a market that we're going to see a slowdown in growth. And it's not a slowdown in growth for everybody, but overall, when you see GDP coming down, which is projected to come down a ton over the next 12 months, it's going to be very difficult with these valuations to support these valuations, especially since the thesis and the narrative has changed from, hey, we're going to get low interest rates this year, to we might not even have low interest rates this year. It's a big difference. That was the bullish thesis for all 2023 into 2024. Fed's going to lower. It's going to be booming the market. Well, you got the booming market. The Fed hasn't lowered yet, and they're not planning on lowering, maybe till June. So should we have to re-rate this market? I don't know. You throw in other factors. Hey, it's election year, or government spending, right? You're not seeing the government cut back spending, just the CHIP Act, all this stuff, just starting to hit. But how much longer is this going to go, where we could see stock prices continue to go up, the valuations are skyrocketing with a slower economy? And what's going to happen? You have the government that has to continue to spend, which our deficits are insanely, with over $1 trillion interest expense that we're paying. But if we have any intentions on paying down this debt, you would see the market absolutely crash. That means GDP is going to come down tremendously, because it's being held up by government spending. Crazy spot to be in, but if you want the soft landing, like I said, it's impossible to have a soft landing. Right now, you might think that's possible. It's impossible. It's going to come back to bite us in the ass. We might see this through election year, but you're probably going to have to reposition your portfolios, especially if we see Donald Trump or Republican win. Because when they do, the first thing they're going to be running on, we're going to cut expenses. And when they do that, they're going to spend less, and it's going to result in the market coming down. It's not going to support these high valuations. We're not there yet. Enjoy this run, but be prepared, especially if you own expensive stocks going into these earnings seasons, is very, very dangerous. So, guys, that's it for me. Questions, comments, email at frankcurzioresearch.com, and I'll see Wall Street Unplugged premium listeners tomorrow. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Including the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.